Welcome to the Irish Farmers Journal Weekly Podcast.
Hello, this is Thomas Hubert, news correspondent with the Irish Farmers Journal. Welcome to this week's podcast. This Wednesday saw the launch of the 2017 Irish Farmers Journal KPMG Agribusiness Report. Here are some voices from the industry. First, Patrick Coveney of Greencore, then Orneo's Kevin Lane, and finally Paul Kelly from Food and Drink Industry Ireland.
Okay, Patrick Coveney, CEO of the Greencore Group. Patrick, fascinating insight into your businesses both here and in the US and the UK. You spoke about Brexit, that it mightn't be an overall huge challenge for you. How do you square that circle, as I say?
Yeah, I mean, I think the reason that Greencore is quite well protected from the different Brexit scenarios is that everything we sell in the UK, we make in the UK. So we don't carry the kind of export risk that a lot of other Irish food companies that manufacture in Ireland and export to the UK would have. So the essence of the Greencore business is that we are a very large domestic business in Britain and a very large domestic business in America, and that gives you good protection against what might or might not happen in terms of tariffs and trade deals and so forth.
Quite incredible growth that Greencore has under your stewardship. The vision, when you sit down on day one, how do you plan 10, 15 years down the line, or is it more short term than that?
Well, we try to do both. We have a long-term plan or vision for what we're trying to do with the business, and then you have to operate, every week and every day in terms of executing against that. And as things change, you make changes to the plan as well. But we've been consistent in trying to have a focus on convenience foods, a focus on building scale in Britain and in America, and then a focus and way of working with customers that we've been very consistent on through that time.
And finally, 4 years ago to the day, you said that there wasn't much hope for a beet industry, a sugar industry growing up back here in Ireland. Is that still the same, coming from where the origins of Greencore started?
Yeah, I mean, I think I think it is unfortunate that there isn't a sugar industry in Ireland, given all of the positive contributions to and the role that sugar beet played within the Irish farming and Irish agribusiness system. But the essence of why that's the case was the reform of the sugar regime in 2005, and the industry having left Ireland, I think it's unlikely that it will return.
Kevin Lane of Orneo, at the Irish Farmers Journal Agribusiness Report launch in the Intercontinental. In the context of Brexit in the next 12 months, how is the Irish dairy sector looking at the moment?
Good morning, Amy. I think there's a lot of work going on. You heard at the conference this morning how big a threat and a challenge Brexit is going to be to all of the Irish processors into Great Britain. Clearly, we're expecting some downside. There's no two ways about it, but it's going to be a negative to us, both we think at a volume level and at a margin level. We're very dependent on the cheddar market into Great Britain. A lot of our dairy gets exported off the island, 90% of it, and Britain has always been our closest ally. Brexit is going to bring challenges to all of us. I guess what we're trying to do to mitigate those is making sure that we're super efficient in everything we do within the UK. Number two, we're working hard at developing new markets outside of Great Britain, and that's a journey we've been on for a number of years. And I guess number three, we're trying to make sure that we're looking at non-cheddar platforms. While we're excellent at dairy in Ireland and we produce a very sustainable product to a very high quality, we have to make sure that we're producing other types of dairy and cheeses in particular that are relevant to the UK market if and when cheddar does drop off.
And Kevin, you mentioned at an RDS Economic Vision event, I think it was around Christmas time, that you had a team looking at Brexit for the opportunities for Ireland. How is that team looking, or have they come up with anything of note yet?
They're finding it harder, Amy, to find opportunities than they are to find challenges and threats. I think in the opportunity bucket, it's back to that team coming to us with market-led data, consumer-led data, telling us what are the new products we should be getting involved in a post-Brexit environment, and more importantly, what are the new markets we should be getting involved in. That team is meeting monthly. They are kicking out a lot of good quality information, and then every 2.5 months, the whole UK and Irish team get together in Britain to try and assess what we all know and to share information.
Paul Kelly of food and drink industry Ireland at the Irish Farmers Journal Agribusiness Report launch in the Intercontinental Hotel. Paul, how is the food and drink industry looking for the next 12 months in the context of Brexit with negotiations starting?
I think it's looking quite challenging. I think the big issue for business is uncertainty. We've had the impact of currency for a good number of months now at this stage, and certainly we've had a little bit of strengthening of the currency, which has provided a small amount of relief. But I think as we move into the negotiations, we're going to see a lot of additional volatility coming about as a result of the political uncertainty and the political decision making. So that's going to be quite difficult for companies. As we begin to move into the process, hopefully we'll start to see a little bit of what the future might look like. Again, I think as an industry and as a country, we've very, very clear asks. We want a comprehensive free trade agreement. We want a sufficient transition period to allow business and the administrations to adjust, and ultimately we want to try and maintain and, if possible, grow our existing UK market.
And opportunities for the Irish food and drink industry would rely a lot on the UK market. Are there any opportunities for us out of Brexit?
Well, I think, the message often is that we rely on the UK market, but I think it's worth looking back over the last 6 or 7 years. Certainly we substantially increased our exports into the UK. They took a little bit of a fallback last year, but that happened at a time when our exports to other European markets and to third country markets actually increased at an even faster pace. So I think the story of new markets and market divergence supported by the likes of Borbia and Enterprise Ireland remains. We'll have to focus even more on that. But you can never take away from the fact that one of the largest economies in the world is on our doorstep. It's a high value, very sophisticated market both for grocery and for food retail. It's very attractive to food businesses the world over. We're very lucky to have it on our doorstep, and we need to do absolutely everything to make sure that we maintain and if possible grow our market position there.
You're listening to the Irish Farmers Journal podcast.
Now, let's hear from the Irish Farmers Journal's agribusiness editor and lead author of the report, Owen Lowry. He shares some of the findings with news editor Patrick Donoghue.
Owen, a meaty product. It's up on 80 pages. It's been in development for up on a year since your last one, obviously. But it's split into two different segments, I suppose. One is a fairly comprehensive analysis and survey involving KPMG, and the others we'll talk about later. But the first, the survey results from KPMG. A very uncertain time in agribusiness. Brexit, almost a year ago now, and the election of Donald Trump as president of the US. A lot of uncertainty. Is that what the reflection of the poll results have shown back to you?
Yeah, Patrick, it's been a very interesting survey this year. I suppose what we did a number of months ago, we went to 14 countries in conjunction with KPMG, and we surveyed a number of agribusinesses. And what we found is that overall businesses are quite confident, and which is quite surprising given the challenges and threats of Brexit and Trump, as you mentioned. So overall, I suppose 80% of the businesses that we surveyed said that they expected to grow, with half of them expected to grow quite strongly at above 5%. And then this was reflected further in the level of investment that they want to do, I suppose, with the majority being around 90% of the companies wanting to invest in the coming year, and around 80% of them saying that they have no access to finance. And this is across the world, of course. When we drill down a little bit further, what we also found was, our research and development, while they all recognise that it's important to do to grow their businesses, very, very few of them are investing in significantly in research and development, and less than 1%.
Has that changed much over the past year? Is that where the confidence has been felt?
I think what we've seen is that while they do expect to grow, they're probably expecting to grow a little bit slower than they did in the previous years. But I think overall, we were surprised to see that growth and that confidence is there. But I suppose that comes back and plays into the trends of the global population growth and the westernisation of diets, the growth in China, which, albeit it's slowing, it's still growing quite significantly. And I think that plays into where we saw where the biggest opportunities were, which is in those Asian and particularly in Chinese markets, that they saw the the highest growth areas were in those two countries, but along with Russia, and the ones with the least opportunity were the ones, aforementioned ones of the UK and the US, given the challenges around the Brexit and the Trump presidency.
And maybe we'll go into some of the type of the scale of companies that are involved in it, but it is a very uncertain time. There are big changes we've seen over the past 12 months. Is the fact that people and businesses are more confident, is that a kind of putting up a facade? How can we, how confident are they is the question, and how can they benchmark that?
I don't think it's a facade. I think it's very real. I think, business goes on, right? These are things that, Brexit hasn't actually happened yet. While we've seen the effect of sterling, where, 500 odd million has been wiped off the trade between the UK and Ireland in 2016, we still traded significant portions, or 50-60% of our product goes there. Businesses have to sell there. In one of the interviews that we did, we interviewed about 14 companies, and one of those interviews was with Borbia and Tara McCarthy around the growth of exports and the potential over the next 5 to 10 years, where we expect about 8 billion to be added. But one of the surprising things that has come out over the last number of years has been that the growth of international markets has been absolutely massive, where in the last 6 years alone, international markets have accounted for half of the growth. So we do have an ability to diversify, and we have proven that over the last number of years. And although significant portions still go to the UK, I think what we're going to see more and more is that the international markets such as China and the US are going to play more and more of an important role.
And tell us on some of the companies, because KPMG works with a broad suite of companies, important companies, and this survey went right across the world. The type of companies from the very big to the very small, I presume. Yeah, so we looked at in this report we have every agribusiness food PLC, along with some of the major family companies who are involved in the food sector, and then we talked to in particular of interest is Zambeef, which is run by Francis Grogan over in Zambia, which has grown into a massive company in its own right. So there's a big range. I suppose what we're seeing, a common thread, we talked to Greencore and their recent investments into the US market and their I suppose their growth story over the last number of years. We talk with Glombia's Siobhan Talbot, and she's coming up on 4 years in her role as CEO, and this current restructuring that is going on in the business, it really is going to define her leadership, and this vote will happen on Thursday. So it's a phenomenal growth story in itself. We also look at Ornua and the importance of free trade. If we go back and we interview Kevin Lane, and we talk about the trade and the access to the EU market back in 1973 was so important and has allowed Kerrygold to become the number one butter in Germany, and it's its most important market. But similarly, today, the importance of that open and free trading environment for the US market, and then the challenges of that could be coming down the line. It's a real who's who of agribusiness leaders who you have interviewed, and the profile, not even just on the survey, but you do have, there's obviously a very much Irish connection. Everybody you're speaking to, from the likes of Francis Grogan, as you say, the person who's built the integrated food company in Zambia, right from Keith Kenny from McDonald's. You've got Tom O'Mahony from CEO of Origin Enterprises, Patrick Coveney, who's maybe some people might know as the brother of the next Taoiseach, or probably more so the CEO of Greencore, who's grown from being a sugar company to the world's largest sandwich manufacturer. What are the messages that these senior high profile figures are saying that can be taken out and applied to farm level, but also Irish agribusiness level, who aren't on the scale of these companies, to be fair? I think having sat with these CEOs over the last 3 months, I think one of the key messages that we've taken out from this is that the customer is really driving the agenda more and more, and the customer is becoming more demanding, but is also wanting quality food, safe food, traceable food that's raised in an environmental and, inverted commas, sustainable way, but they want it cheap. And this is one of the biggest challenges for food companies in light of all the geopolitical threats that are going on there. How do they provide for the consumer today all those things that tick a box to drive growth in a world that really isn't growing and there isn't much more demand? It's
quite challenging, and that's where the farmer, I suppose, is a little bit caught in the middle, because the farmer's been asked to provide more and more in the form of forms and regulations and quality standards, but is not seeing that being reflected in the price of the produce that they're getting. And the companies understand this, and their hands are a little bit tied as well, because they can't achieve that from the end customer. So the customers are demanding one, but yet they're not willing to pay that extra price. And it's the challenge for the industry, and that's what we're going to discuss at our conference on Wednesday, around how do we as an industry try to get more people to pay that little bit extra for food, and is it even possible?
The Irish Farmers Journal Weekly Podcast.
Our beef specialist, Kieran Lenihan, continues his tour of the New Better Farm programme participants in this week's Irish Farmers Journal. He met County Kilkenny suckler farmer Michael McDonald, who shared his recent experience of reseeding.
Michael, talk us through the two methods you used.
On 5 acres, we disked it twice, and we spread it off. Firstly on the 7th of April, and then on the 25th of April we disked it twice, and then I rolled it in again, and following that then we rotated it and sowed the seeds on top, and then I rolled in the seeds again and put 3 bags of 10-10-20 to the acre on top of it. The other 9 acres we sprayed it off on the same date, and we just went straight in 3 weeks later and stitched it in, the grass seeds into it.
Talk us through, Michael, the contrast in costs between the two methods.
The disking and the rotivate and the sowing of the seeds on the 5 acres will cost €120, and the stitching was €50 an acre. So there's €70 in the difference there. But on the ground that we disked and rotivated, the ground was a bit rougher and needed to be done. Like, there was rushes and it needed to be cleaned up. Like, the stitching worked well on good clean ground.
Tommy Cox, Better Farm Advisor. What would you advise guys in terms of matching a reseeding method to a certain type of certain patch of ground or a certain type of soil?
It all depends on the type of soil that you have. I suppose Michael, is the two different options he chose here. The option of stitching, we were conscious that there was a silage field at the back of it, so we needed to get travelling on it quick, so we had to be mindful of that. It also depends, depending on what method you're using. Like, ploughing doesn't work in some cases if the depth of soil isn't there, so it's just as well to stitch it or else disking the top of it. It can work either way, but a lot of it depends on the type of field that you're in the first place.
What are the risks associated with both methods?
With stitching and ploughing, I suppose the risk with the ploughing is that if a wet spell of weather comes, you're leaving your ground a lot more susceptible to poaching, so you're breaking the skin on your ground, and you're going to take that bit in longer to get back into it. Stitching, if the seed doesn't ground is too hard and the seed doesn't kick, there is a chance there that the sward will stay fairly open and a lot of weeds will get in.
We hope that you're enjoying this Irish Farmers Journal podcast. Find out more at farmersjournal.ie.
Meanwhile, news correspondent Pat O'Toole is following an IFA delegation on a visit to the Netherlands. There, he interviewed the Irish ambassador, Patrick Kelly.
Ambassador, we've just been at a function here this evening with the county chairman of IFA and their leadership, and you were explaining to them, I suppose, many of the similarities between the Dutch perspective on Brexit and the Irish perspective, and the opportunity for closer cooperation. Could you just expand on that for us, please?
Well, I suppose we often think that because we're a neighbouring country with the UK, that, we're the most affected, and we probably are. I think it's widely recognised we're the most affected country by Brexit. But in fact, the Netherlands considers itself as a neighbour of the UK on the other side of the channel. And in fact, in terms of its economy, it will be severely impacted. So we're in a lot of discussions with the Dutch. We have a very similar approach. Even before Brexit, we worked very closely together in the EU on a whole range of files, and I think if anything, Brexit has just brought us closer. So there's an awareness that there's a need now to form new alliances and to unite in terms of strategy within the European Union going forward.
The Dutch seem to have an intensely positive attitude to problem solving. We heard the farm leader, the Dutch Farm Union leader here tonight, and he talked about TTIP as an opportunity, whereas we see it as a threat. He talked about Brexit being something that has to be overcome, the new CAP, the challenges that will present, but no negativity and no sense that the future of the sector is threatened in any way, whereas in Ireland we seem to always be looking for someone to solve our problem. Is there something in the Dutch mentality that we should be trying to emulate? Or?
Well, I think in fairness, the Dutch are also aware that Brexit poses a huge number of challenges for them, and that's why, as I was saying earlier, I would say in terms of all the European Union countries, from what I've seen, the Netherlands has taken this most seriously in terms of mapping out what the implications are, what the risks are, what the problems will be. So I wouldn't say that they're blind to the risks or blind to the problems. But you're right, they have an attitude about also let's see how we can get over this together. How can we move forward? And I think part of that will be trying to create, like Ireland, a stronger European Union with stronger alliances. And that's why they're talking to countries like Ireland and Denmark and other countries to see how can we make, how can we get through this together. And I think that's whether it's a lesson we learn, I think it's an approach that we have going forward. I think it's been aware of the risks, managing those risks, but also trying to identify whatever opportunities there are. And as we said, even in terms of our growing trade between Ireland and the Netherlands, there's huge opportunities to even grow that further. And I think both sides would recognise that.
Thank you very much.
You're listening to the Irish Farmers Journal podcast.
The European Commission's chief Brexit negotiator Michel Barnier visited Lakeland Dairy's Loch Egish plant on the border last week. The Irish Farmers Journal's market specialist Felim O'Neill asked the Co-op's chief executive Michael Hanley what he expects from Brussels in the negotiations.
I suppose we have four major asks of the Commission. One of those is that there's continuing free trade between Northern Ireland and Southern Ireland, and some special status in there for this particular region, which is going to be impacted worst of all by the discussions and by the Brexit outcome. Second thing I suppose we need is we need a free trade. We need a free movement of goods. Right? We don't want a hard border.
Right.
And customs posts, and there's no needs for customs posts, right? Because for the last 22 years we've purchased milk in Northern Ireland, brought it across the border on a daily basis, and accounted for that under EU legislation. We manage the quota on behalf of the EU.
So the structure's there.
The structure's already there. There's no need to reinvent the wheel. We give the farmer a docket in relation to the volume of milk we collect on the day. We have a weighbridge docket where the milk is actually offloaded or whatever process.
Verified coming in.
We give them a month. We give them a printout on a monthly basis then of whatever days milk we have collected.
So you can handle the logistics of it?
We can handle the logistics. The system's already there. And we have the milk. We have a printout then at the end of the month what the farmer has, and the volume of milk is delivered. And then that's has been subject to Department audit, North and South, and subject to EU audit, and it stacks up and it's fully traceable, quality assurance, etc. So the system is already in place. And so the third one then is what we need a good long transition period so that farmers get a chance and business gets a chance to adjust to the new environment. And we also need the continuation of the 53 free trade agreements ongoing in that transition period.
Right.
That the free trade agreements stay in place that are there in Northern Ireland that the EU agreements are already there in place. That
Northern Ireland continues to have access to those.
Continues to have access to those in that transition period. Right. And that is critical so that people can gear themselves up for the new
and prepare for the new era that's coming down the road.
Yes. And I suppose the fourth area then is in relation to financial subvention. There's going to be extra costs along the way here. People are going to have to retrain staff, customs issues, documentation, perhaps new investments. So I think the EU has to relook at the grant aid and its grant aid structures. So those are our four asks.
You have it very, very clearly thought out. Obviously what you want, what your business needs, and obviously you're working with the farmer interest because they are the suppliers, they are what makes your business work.
Yes.
Are you confident that you will get those, that he will deliver on those? I suppose, for example, on the latter one there in terms of money. He'll pass that on to the Irish government and to some other department in Brussels. But you certainly, you're giving him an answer on the logistics of it. So really it's coming down to market access and being able to do the business is the real crucial one for you.
Market access is access on a daily basis. We sell product in 80 countries across the world. We want to continue access to those 80 countries and those 80 customers that we have in different countries. And when we say, I think it's time now for people to come forward with solutions. There has been a lot of questions, etc., a lot of pontificating, a lot of rhetoric. Now is the time for to bring solutions to the Commissioner and bring solutions to
get down to detail, in other words, and stop the sound bites.
But it's time for solutions now. It's time for solutions. And those are 4 feasible solutions as we would see it.
Michael Hanley, Chief Executive, Lakeland Dairies, thank you very much. Thanks very much.
The Irish Farmers Journal podcast, online at farmersjournal.ie and on iTunes every Thursday.